oftentimes, as you're navigating the year, whether you're an individual working a W-2 or a business owner, you lack the clarity of essentially what your tax liability will be. And that ultimately determines either A, how much you're going to owe at the end of the year, or B, how much of a refund you're going to get. Now, because a lot of the information we don't get till the end of the year, and a lot of those figures aren't finalized until the end of the year, it is still pretty difficult to pinpoint exactly what that liability is going to be and say, hey, this is how much you're going to owe, or this is how much you're going to get back. So there are some tools that we can leverage, though. There's some tools that we can leverage that we can use to our advantage to go ahead and try and estimate those taxes and essentially what that liability might be. That way we can have a greater understanding. Now, there are a lot of tools that I use from Google spreadsheets that essentially almost simulate the tax return, right? But those have to be pretty tailored. So, and those have to be shared. So what I did is we've actually gone ahead and we have built on the drbsllc.com website, we've built a federal income tax calculator. So what this looks like is you basically come to the page, drbsllc.com/Fed income tax estimator, and you can go ahead and put your numbers in. So a lot of these things you may be able to get. And I do want to note this, right? This is just an estimator to get you an idea of what your tax scenario might be. This is not your tax return. This is not going to be how much you owe or how much you're going to get back. This is just an estimator just to give you an idea, right? So basically we come in here and on this left-hand side, and this is mobile friendly as well, as I'm using a desktop right now, but it is mobile friendly. So you'll come in, you'll type in your AGI. Your AGI is your adjusted gross income. If you're unaware of what your AGI is, go ahead and send us a message, and we'd be happy to explain that for you. But you should be able to find your AGI like on your tax return. Simply put, you could probably think of it as like all your income, right? So your gains or losses, your business income, your regular W-2 income, any other income you might have, minus any adjustments to that income, right? For example, student loan interest deduction. The interest you pay, that would be a deduction. And that essentially gets us to our AGI. So once you've gotten your AGI, which, for most, we'll say basic returns, usually your total income may be your AGI. Again, a basic return has nothing except a W-2. That's what we're going to see. So let's just say that this person makes $50,000, right? And at that point, the standard deduction or itemized, right? We could go ahead and say it's, I believe for the new year coming up, and this will change, and that's why we have a number versus, or we have a kind of fill in versus a like a bubble right here. So essentially, we go ahead and say, well, let's say it's 12,950, right? And then if you have any business income or other deductions, you would go ahead and enter that in here. So let's say, for example, of this 50,000, I had 20K that was business income, and so my qualified business income deduction might be 5,000, right? So as we can see, what that does here is it essentially takes the AGI, and this is updating in real time, and then subtracts the standard deduction, right, or my itemized deduction, and then subtracts my qualified business income or other deductions, and essentially gives us our taxable income. Okay, so that gives us our taxable income. So then we come down here, and based on your taxable income, you're going to look at this chart. And you're going to say, okay, well, based on that, and again, this is a very rough estimate. The tax actually works a little bit differently. It's essentially 10% on the first 11K, 12% on the next threshold from 11K to 44. And so it's not one flat rate for the whole thing, but essentially the income in these levels. So if you make 50K, you're going to pay 10% on 11. You're going to pay another 12% on 34K, and you'll pay the remainder at 22%. Okay. So, but back to this. So at this point, again, for our rough estimate, this is probably going to over project. So our liability is probably going to be a little higher here. I think it's, from my perspective, it'd be probably better to have a higher liability or higher liability estimate and overpay or versus an underpay. But again, this is just an estimate, right? Something that you could come in, anyone, put in some numbers, get an idea. But this would put us in the 12% bracket. So we'd go ahead and put in 12%, right? And right. Oh, but I did say I had 20,000 in self-employment income, right? So we would essentially click on this button right here, and now we need to figure out our self-employment tax, right? So my profit was 20K, but let's just say it was 30K in income, 10K in expenses. that would give us right a 20K profit. 30 minus 10 is 20, and at that amount, our self-employment tax is 3,060. So I'd go ahead and copy that number. We can go ahead and drop that in right here. We go ahead and drop that in right here. And then, yeah, so, again, it's updating in real time. So we see our SE tax is updating right here. We can see that our liability would be 6,906. Now you look at your W-2 and you say, okay, well, or maybe you look at your most recent pay stub and you say, well, I've had 3,000 already withheld from my paychecks for federal income, right? And then for my business, I already made, I made 3 payments totaling 2,500. Okay. And then credits, I end up having, I have a kid. So, I'm getting a $2,000 credit for that. Right. So now, right, we've kind of just, again, roughly estimated in less than 5 minutes what our refund might be. Again, this is a very rough estimate. This isn't an exact scenario of what your tax return is going to look like because there are more factors that go in, but this gives you a rough estimate. I could say, if we were to put this into a return and all these numbers were valid, right? SE tax, QBI, if all our total other deductions, if all these numbers were valid, we'd probably be getting actually a little bit more of a refund than this amount right here, right? Because we can then take into consideration, well, if I do have a kid, that might bring I might be able to, instead of going a standard deduction, I might be able to go itemized. So we might say, 18,950, because I'm head of household, not itemized, sorry, head of household versus single. And so that's something, maybe we'll add right here. I'd appreciate the feedback if you guys let me know, right? Like under the tax rates, would it be valuable to have the standard deduction amounts, right? So then you could say, okay, well, if I'm single, I'm going to put this in here. If I'm head of household, I'm going to put that there. I believe the single is 12,550. So, but yeah, then we say, okay, we're going to get a refund. Now, one thing that this doesn't take into consideration is that some credits are refundable and non-refundable. So to review what refundable and non-refundable mean, so a refundable credit is going to be a credit that, let's say, if it brings your liability to 0, you can get refunded the remaining amount. A non-refundable credit would be a credit that only brings your liability down to 0, but wouldn't refund you, okay? Non-refundable. And that's about all we have. So we have the self-employment tax calculator, which will give you kind of what your SE tax is, which is 15.3% of your profit. So if you do have 1099 income and you file a Schedule C, this will be valid for you. And then we take this information and we bring it over here. So I do appreciate any feedback. That way we can continue to improve this. And if we get enough interest, we'll continue improving this and add some more conditional logic to this. Like if this, then go ahead and do that. That way, yeah, we can continue to build tools and resources that are going to help empower you to make strategic decisions year round. Thank you for your time, and I will see you on the next one.